I can ask Julian and Chris to resume now for the showcase. Thank you.
Thanks, Joe. Hi everyone. Welcome back. Hope you enjoyed the first session. We're going to spend some time now hearing from some of the fintech speakers from Manchester and the surrounding area. We've got a mixture of short pitch presentations for you. These will be from startups or from organizations who are actively involved in fintech. The way this is going to work, I'm going to introduce everybody one by one, and then at the end of the session, Chris is going to kind of co-chair this with me, and Chris is going to ask a question. We've got the ability to take questions from the audience. If you've got a question for any of the speakers, pop it in the Q&A, and then we'll raise them with people at the end. So over the course of the next hour, we're going to hear from the following in this order as well. We're going to hear from Frost, from Pawel. We're going to hear from UK Advisor, from Maxim, Greenlink Digital, Cedric, Interactive Investor. We have Moira with us. We've got Mark from Infinity Works, Mutual Vision. We've got Rich, Collctiv. We've got Pete with us, Raisin, Kevin, and Open Money. We've got Rich. So one by one, guys, I'm going to get you to get you to the screen. Tell us about what you're doing, and we'll take it from there. So Pawel, where are you? There you are. Hi, how are you doing?
Yes,
okay?
hi.
Great to see you.
I'm good, thanks. A long time no see, Julian.
Yeah, I'm really looking forward to hearing the progress with Frost. I get all your emails and see all your updates, but be good to hear it from you. So take it away and tell us all about it. And if everyone who's not speaking could just make sure they're on mute, that would be great. Thank you.
No worries. Okay, first of all, thanks for having me. It's such a great pleasure to join FinTech North event, especially that Frost is based in Manchester. So it's kind of a big thing for us to showcase to you guys. So let me tell you a few things about Frost if you haven't heard about us before. Let's start with the actual problem which we try to resolve. So majority of our customer target base think they're good with money, but actually the numbers shows a different story. Most people spend on average 200 on the purchases they can't afford. They also overpay on energy and gas, as well as lose money just by simply keeping money on no interest or low interest accounts. Additionally, the existing incumbent banks and current account providers don't provide any advanced features or any assistance, or their apps are just simply slow and clunky. So we've decided to build Frost. Frost is an intelligent current account with a smart analytics and intelligent switching capability. I'll start maybe with the actual analytics because that's quite a big thing. It's simply educating users on their spending behavior in the most simplistic way. So rather than just going into deep analysis of where your money goes, such as grocery and energy and stuff like that, we broke the categories into three simple categories: melting, cool, and liquid. Melting is all your necessities, such as your rent, etc., insurance. Cool money, any fun things, and liquid money, which is anything which can which is left at the end. You can spend it or you can freeze it, which is basically saving it or investing this in the future as well, once we are having that capability. You can dive deeper and see all those breakdowns, but at a glance, we've decided to simplify it as much as possible. So that's one a big feature. Another one is more intelligent feature to save time for our customers, because our customers are busy individuals looking after their careers, juggling their personal life, and they don't have time for things like energy comparison and switching. And we built a solution to automate that process, since it's money related, and that can be done all from the app. So I'm going to share my screen with you on my app just to show you how simple it is. And I'm excited to show you that because we are near to launch our private beta in the next month or so. So I've got a demo version already. So I'm going to stop sharing this and show you my iPhone screen. Okay. All right, so that's my screen. You should all see it. That's where the Frost is. It's a simplified version now where you can see the spending and stuff. As you can see, I've been spending recently. My version of the statistics here, where the money goes, but most importantly, Save Assist. That's where you can see all the potential savings. So my Frost account picked up that I pay £146.50 for electricity and gas, and also showed me the potential deals, better deals. That's even been picked up without me having direct debit assigned to Frost. That's a new account which I've just opened. It picks up the data from various other databases. This is our tech which we've built in-house. So I'll show you how easy it is. Normally you would get a push notification to let you know that's a better deal, but now I've done it manually. So you can see more. You can choose based on the price or the name which you know, or things like green energy. This time I'm just going to go for the cheapest one, which is EDF. I'm happy with their simple online one fixed term. Press continue, and after a few seconds, the instructions for change the direct debits and sign new terms has been done. So it's now working in the background on our back end, and tada, it's been done. So that's very simple and time saving, and that's what we want to do. We want to build a current account with additional features to save time for our customers, so they don't have to download 10 different apps to do 10 different things. The market opportunity is huge for our target group because most of them are currently unhappy with their products and they're looking for new ones, trying new things. So opportunity is huge, which we're very excited about. We are different in many ways to existing players, incumbent banks, as well as challengers, as well as apps which sit on top of your account and feed the data through open banking, which is a big thing now. We want to achieve the status of your preferred account. We've got a few ideas how to achieve that. So we don't want to focus as much as on pulling the data from your current account, but making Frost your current account by giving you all those additional features. So that's our biggest differentiator. On top of that, you can expect all the usual stuff, such as a very easy to use app. But also what we've done, we've invested heavily into our own infrastructure. We know the importance of saving money and breaking even as quickly as possible. So we rather than go to the market and use third-party providers and white label, of which we talked today, a lot of the tech has been built from scratch. We've got really good people on board to advise us on that. And for example, our core banking is brand new, built from scratch with the latest tech available. Our growth roadmap looks promising. We are currently at the stage of energy comparison switching. As you can see, we've got insurance, finance, shopping, and wealth. That's on our roadmap. We already started a bit work on insurance. That's not going to be available in our MVP, but energy is definitely there for the first users when they onboard. In terms of the unit economics, which is very important, as I said before, breaking even, it looks healthy year one, especially healthy year three. We pay a lot of attention to that, the way how we make decisions on who we work with, as well as what we can do in-house, drives our economic units more to improve our profitability. People behind Frost, it's myself. I have a background in IT computing from UCLan in Preston. I have previously built from scratch a successful law firm based in Manchester, which now employs over 100 people and generates millions in revenue. Edita, who is co-founder, she moved from Optimal with me to found Frost. She's got economics and a business degree, but most of her career she spent in marketing. So she has been driving Optimal's growth and now Frost growth. Ross Lee, who previously was at Klarna and before that at PayPal, he's our finance and risk guru. And advisory board, Gianluigi, who previously worked on N26's core banking, and he's advising us on how to build better core banking system, and Marcel Van Oost, of which you might have heard of before. And of course, software engineers to build the actual product. Traction so far, since we launched our waitlist, we onboarded 7,000 people on our waitlist, and that's with barely any marketing because we are bootstrapping at the moment. We are self-funded. We are undergoing FCA approval to become an EMI. Hopefully not long now. The last communication from them advised that they're going to get back to us by the 10th of December with some more updates. So hopefully not long. From the bigger breakthroughs, we've decided to go the route of principal member with one of the major card schemes, which is unusual. Most people went with BIN sponsors. We decided to go as a principal member, which is a big deal for us because we're gonna save tons of money, have great incentive offer on the table. We can't tell you which one it is. It's one of the two. Unless you are an investor, we can then share this with you. We are also a member of AWS Activate program, and they also gave us some money towards our infrastructure. So if you're interested, please get in touch. As I said before, currently Frost is self-funded, although we are now ready to start our first funding round, the pre-seed round. If you're a potential investor interested to learn more about our product, drop us an email at hey@frost.app, or you can find me on LinkedIn and send me a message there as well. Thanks for watching. I hope you enjoyed the presentation, and stay tuned for Frost launch.
Thank you. Do we have any questions from the audience at all? Otherwise, I'll go for it.
Go for it, Chris. Kick off.
Yeah, sure thing. So you're applying for the EMI license, so to the money mover, effectively from the FCA. Are you going to have any retained? If it's a bank account, you're going to have to retain current accounts, maintain current accounts for people, aren't you? Do you have to keep regulatory capital for that?
Yes, we do. Yeah.
And how are you going to build up the resilience to be able to do that? I mean, it's going to be kind of difficult to get regulatory capital from day one. So what's your plan there?
The plan is to go in tiers. So moving from like small EMI where the capital is initially smaller to full EMI at a later stage, which we're preparing as well. At the moment, we've got enough cash reserves to do it ourselves for the initial stages. But also, as I said before, we are at the stage we're going to need external capital quite soon. And part of the fundraising will go towards the capital requirements, not only for the regulatory from the FCA, but even things like direct debit collateral or card scheme collateral as well.
Okay, when you're onboarding people, the 7,000 people you have on board at the moment, the plan is for them to all intents and purposes, you're going to be the primary accountant, so you're going to want to start having them put through their direct debits through for all of their utilities, because you're starting with the utilities space, right, aren't you? That's if I looked at that progression all the way through to wealth management on the right-hand side. So do you think that's realistic? Do you think people are going to give you their direct debits on day one and make you operational, or is it perhaps that it would be better to just draw the data down from and actually apply yourself as a piece of technology that sits over another bank as you migrate towards the role of being core bank account?
Yeah. It's also a potential plan B. We are very ambitious and we want to give it a go and try at least to become this primary account. We've got a few ideas how we can convert customers to make Frost a main account. We spoke to other customers who, for example, made Revolut their current account, and what made that decision. So we are taking steps toward that route, and we'll give it a go and see how it goes. One of the things which will initiate that is that actual energy switch, because when you launch the app, you don't have direct debit attached to Frost, but Frost can detect who are you paying and how much quite accurately. When you switch, you of course switch your direct debit to Frost. So that's the first step. Another one, which is quite a big one, which you couldn't see from the app because it's not available at front end yet, is the management subscriptions and all the in-app purchases through Apple Pay and Play Store. So when you order, I don't know, subscription $3.99 for an app or something like that, sometimes you don't see them. That's another problem which we want to tackle, to show you all those subscriptions in one place.
Or they're listed as a third-party merchant that you don't understand. So quite often we will get an in-house, or we will get we'll acquire something through Apple Pay, and it doesn't show the source merchant; it shows some other third party. Identifying exactly what the product is you bought is a significantly useful thing. Question for you then, one last one: how much are you looking to raise?
We're looking to raise 5 million.
5 million. That's your seed round is 5 million. Yeah.
Yeah.
Yeah. Okay. Cool. Thank you.
No worries. Thanks for the questions.
No, you're welcome. It's interesting.
Yeah, it's great progress, Pawel. I get all the marketing, and I didn't realize your co-founder was marketing background, but I can see it from the, you know, all the tone of voice and the personality that there is in the brand already at this stage. It's really good stuff.
But before we go on, just one thing: have you spoken to Moniz Norris Coppell yet? Have
No,
you
I
heard of
haven't.
Moniz?
I've heard about them. Yes.
Yeah, Moniz had a different approach to starting their kind of being the principal bank account. Was they targeted people coming to the UK who couldn't get bank accounts, and so they focused on offering bank accounts to people which just purely under an EMI license. So there was no credit, there was no savings, nothing at all apart from payments. But actually, it worked. And what I'm thinking of here is not necessarily aligning yourself with Norris, but thinking on the idea that if you do have people who are coming to the UK that otherwise can't get a bank account because they have no credit history, no payment history, no residence history, no bills, no utility bills, signing them up because they're going to need what you've got. So
yeah, definitely. It's also part of the actual marketing reach, because when you do marketing, you can't just advertise to everyone. You need to have your niche areas. You don't have to have one. You can have 10 different areas. You can, I don't know, attack gamers, which is a big thing. Gamers spend a lot of money, for example. And a lot of companies, even the new challengers, new entrants, target specifically gamers. So you can go after different type of people. And the expats, it's one of the also lucrative ones.
Perfect. Cool. Thank you.
No worries.
Julian, over to you.
Yeah, thanks. Okay, now we're going to hear from Maxim at UK Advisor. How are you doing, Maxim? You need to come off mute, I think.
There we go. Hello.
Hi, Maxim. Take it away. How are you doing? Okay.
I'm all right. Yes, you all well?
Yeah, good. You turn your volume up slightly.
Yeah, you hear me now?
Yeah, that's better. Thanks,
Brilliant.
Maxim.
That's all right. Hi, everyone. So yeah, I'm Maxim Cohen, and I'm the founder and chief executive of the UK Advisor. So the UK Advisor is a digital franchise network, and essentially what that is, it's for mortgage and finance professionals. It is a business in the box concept. So we ourselves have direct authorization with the FCA. We've got the infrastructure for mortgage and finance professionals. We've got all the relationships with the lenders and providers. And in some ways, we lend all that to our franchisees, and they come on board, and through our training program and everything that we give them, they become UK advisors. So we are actually the first of our kind to be accredited by the British Franchising Association. And obviously our proven model as a company and the support that we are able to give our franchisees is, really sets them off in the world. So just a bit about us, what we do. So we are kind of a mortgage and finance company. So we do residential mortgages and home finance, equity release, but also uniquely also incorporate commercial mortgages and business finance and insurance. So our tagline is that we're there to finance our clients' world. There isn't one financial product that we don't do. And that's ultimately what we have set for our franchisees, for our franchise advisors, that they have access to all the different products and the training on that. But the biggest difference for us actually is the platform that we are building for our franchisees. So we have come up with Advisor Tech, which is, I suppose, different in some ways to kind of leading fintech companies, where in some ways they're wanting to bring the forefront of, get to the client straight away. We are empowering the advisor to become the best advisor, and especially in the more specialist type products that in some ways people can't make those financial decisions by themselves or need help. We're giving the advisor all the tools they need in order to really become the best advisor to those clients. So Advisor Tech, we've currently, we've done the first stage of our development. We've built a platform that allows our advisors all around to be able to run their businesses. But again, we also offer through our platform, the ability for our case management department. So in some ways we have let's say an internal processing for all cases that go through, allowing our advisors to actually spend more time doing advice. All the paperwork and everything is automated through our platform. And it's actually taken off their hands. As soon as it comes to submission to lender or provider, our advisors don't have to do anything else. And they can obviously then get on with actually making relationships with clients. So the next stage for us, we're just finalizing a seed round currently. and we're going to be continuing to develop our platform. And the idea is that we're going to be doing what we call our intelligent fact find, and that is allowing our advisors to put the least amount of information in about clients, and through various API integrations and also the use of open banking, it will bring through everything we need for that client, allowing again that really swift onboarding process. And also from our perspective, from a compliance, KYC, knowing our clients and our customers, it will give us the best ability to understand their needs and give the best advice. We're also looking at lending criteria. So lending, especially now, I mean, we deal with lots and lots of providers, from prime vanilla mortgage providers all the way through to specialists, both on commercial and residential. And criteria is literally changing on a weekly basis. So through what we're going to call our kind of automated lending criteria, it will allow from the intelligent fact find really straight away for the platform to find the best products which are tailored to that client. We're also going to have, we've actually just integrated this, our auto docs, which obviously makes it a very swift process. But the biggest thing for us as we grow is RegTech. It's the ability for us to control and understand and help our advisors be compliant, but also protect our clients as well. So our journey so far, we've done 50 million plus in client loans. We are been accredited by the British Franchising Association. We've actually had 70 plus live franchise inquiries, which are ongoing. We've got over 1,000 products available to clients, and we are currently just finalising our seed investment for the next stage of our development. As well, we've got a great team. Each one, I myself, actually a mortgage advisor, but actually a qualified accountant who went into the mortgage and finance world. We've gained actually quite a few people leading in the mortgage and finance industry, which has been fantastic. And yeah, we're just really, really excited about the future, and especially the continuous development of our advisor tech platform. Again, obviously, every business is looking at COVID and how it has affected the businesses. I think for us, we feel there is potentially more relevance for advisors in this current scenario, mainly for a few reasons. The need, number one, is probably the need for more specialist mortgage products. If people are obviously they've missed payments and their credit has been impaired, or their actual income has changed, they're going to need an advisor to really look at all their options for them. For us, actually, as a business, with the growth of the franchise network, which is obviously what we're wanting to do as well, clients is in some ways we're a B2B and a B2C business. Unfortunately, the saturated job market we're expecting that franchise propositions will become more needed, and that's because obviously when there's not as many employment opportunities out there, for us, you know, when there's not as many employment opportunities out there, the only alternative is going self-employed, but that can take 12 to 18 months for anyone to get started. So the idea is that they buy into a franchise, which is a ready-made model. Obviously, we've got all the infrastructure and the training ready, and they're ready to roll straight away. So it's kind of the in-between employed and self-employed. Product-wise for us, we also feel that the growth in the SME sector will bring an increase in business finance. One thing we found actually, because we've got a hand in lots of different types of products, when residential mortgages dipped, suddenly our business finance went up. Now residential mortgages have gone way up, obviously since the stamp duty being below 500,000, and with bounce backs we've not seen as much in the business finance, but we're now expecting that to go up as well. So I think for us as a business, being kind of in two financial sectors actually has given us that stable model as well, for obviously ourselves as a business, but also our franchisees. So yeah, that's
Thank you. So can I just confirm something? It's the mortgage broker that's your client.
Yeah, so that's we are a B2B, but actually it's the B2C. So it obviously we're giving everything, our whole product, the way we develop our platform is to make the advisor the best advisor, but very much in mind the customer. You know, at the end of the day, it's our FCA license. We have the responsibility to obviously treating customers fairly and making sure everything's done properly. So everything we're doing obviously is to aid the advisor, but more for the customers.
So,
really.
So you're providing a platform which gives the advisor the ability to better advise underlying clients. Why, if you have the license to give advice, why aren't you just going straight to consumer?
Because, you mean why don't we just be the UK advisor in one massive?
Yeah, just go online.
Just go online. Yeah, and that's a very good question. And I think that's something which. So, funnily enough, a lady who's just joined us, she sold her mortgage company to one of the big mortgage companies, and she's just joined us because. And the reason she did was she said she realised when her small mortgage company that got sold went into a big beast. You've got a call centre. You can't advise clients really. If I'm in Manchester and I've got a client in London, you don't understand the demographics, who they are. You can't really advise. You're brokering. You know, you'll find that the latest mortgage deal or something like that. You could theoretically go online to Money Supermarket or Mojo, Habito, Hatrussel and get that sort of brokering. Kind of, for us, it's the advice. You know, we deal with very specialist kind of models. We get to know our clients. So the idea being is if we empower advisors all around the UK, we can be a very similar, you know, ultimately, obviously, if we're one massive company. What you're saying effectively is that the consumer is best served by a local advisor, and you're providing technology to the local advisor so they can be a better specialist for their local clients, right? 100%. So that's the nature of it. Okay, fair enough. I understand that. What's your revenue model? I mean, if you don't mind asking you, how would you make money from this? Is it a license fee or do you take a share of the recommendation? No, so we're quite unique in the way we do it as a franchise. So normally franchises, you just have a royalty or something like that. One of the reasons actually why we got accredited by the British Franchising Association quite early on, it's a very long process, is because the way our model works. So the way it works is we are one company, the UK advisor, one FCA number. All the fees come to us centrally. The franchisee will actually buy into us as a franchise. You know, they are, you know, we give them a lot. We give them a lot of training. We essentially give them a business in a box. So there's a cost to that. But on an ongoing basis, you know, for every mortgage they do, we offer them case management, admin, everything they need to do. So there's a split between us and them. So we pay them, you know, the gross amount comes in, we then take our amount, they then take their amounts. And the way we've worked it out is actually it's, you know, our split is quite, you know, it's not a small split, but actually if these advisors were to work out, if they were to get their own case manager, their own admin, their own FCA license, their own, because everything is included in that, you know, we even include their PI insurance. So all these advisors have is, you know, they just know they can go out there, do everything, and you're providing an operational capability so they can focus on what they really do well, which is understanding the region, understanding the client. That's fine. Exactly. Okay, fine. That's fine. I won't ask any more questions. I'll leave it there. But thank you very much indeed, Maxim. Much. All the rest. See you. Bye bye.
Thanks,
Julian.
Thanks, Maxim. Thanks, Chris. So next we were going to have Cedric from Greenlink, but he's sent us a note, and they've had to. They've got he's not able to join straight away, so I'm hoping that he'll come on later on. So Moira from Interactive Investor, you're now next. So hopefully you're there and ready.
I am here. Can you hear me?
Excellent. Yes. Yeah. Hi. Welcome.
Great. Thank you very much. I will hang on, share my screen.
Yep, got it.
There we go. Okay. So Interactive Investor is a business that's been around in various incarnations for 25 years. Today we are an award-winning investment service. We like to tell our customers that we will take control of your financial future. We're an investment platform. We allow people to deal in shares, funds, investment trusts, and international shares as well, and to hold those within tax wrappers such as ISAs, SIPs and junior ISAs as well. We charge a flat fee, which is very important. We are now the main player, the #1 flat fee platform. We've got over 30 billion of assets under management. And for the flat fee, in addition to your wrappers and your investments and trading, you get an industry-leading selection of investments, plus a team that delivers expert insights and recommendations and ideas for how you can invest. So we're based in Manchester, that's where our head office is, and we also have smaller offices in Leeds, London and Dundee, and across the business we employ more than 500 people. So in terms of the ideas and insights, which is what I head up, I'm head of content for the business, we deliver a news feed every day. We have a team of fund research analysts who will pick out the best funds across the business and deliver those in what we call our Super 60, which is our best in class list of investments. And we also have an ethical list, which we call our ACE list, which stands for our own selection of investment strategies in the ethical investing sphere, which we label ACE, which stands for Avoids, Considers and Embraces. We have a very high Trustpilot rating. We have good rating on the App Store as well. Is it going on? Oh, hang on. In terms of the flat fee, we're very keen to promote the benefits of this. So we charge £9.99 a month. We're like a subscription service for investing. And most of our major competitors charge percentage fees. So we're keen to showcase really how that can affect the end result. Most people are saving or investing for a period of at least 30 years. And independent research, when we compared our flat fee with the percentage fees that others charge, show that these can amount to incredible differences over time. Compared to some competitors, if you're saving £100,000 initial balance in investing, which many of our customers are, then you can have savings of up to £94,000. So I've mentioned that we've been around for 25 years. Here's a bit of a timeline. We launched in 95. We were there in the initial tech boom. We were actually floated on the market at one point, rebranded to Apple. Then we reintroduced the Interactive Investor name. At the beginning, we were more of a content showcase for investing. We had a discussion board, and it was only later that we added the trading function. We joined forces with Halifax Share Dealing to provide the first brokered services, and then we set up our own dealing function at a later date. So that's a potted history. But the last the last 5 years have been where we've really transformed as a business. Oh, it's not allowing me to play my. Let me just play my timeline, which we say we're moving at speed in the past 5 years. So we got investment from JC Flowers, a private equity firm, which allowed us to buy up some competitors. So we first acquired TD Direct Investing, then we've acquired Alliance Trust Savings, and this year we've acquired the Share Centre, which so Alliance Trust Savings and the Share Centre were both flat fee platforms, so very aligned to us, and so we've now achieved this scale that allows us to invest back into the business, and we have these more than 350,000 customers. And along the way we've evolved our pricing model. We've launched the Super 60 and the ACE 30 lists, which I've mentioned. We've also started doing in-depth thought leadership on retirement. So we launched a retirement survey of more than 10,000 investors to find out what people really feel about retiring. over the past 6 months, it's been a very interesting time for it being a trading platform. We've had record trading days this year. We've been solid. We've been able to move most of the workforce to work from home because we're digitally enabled. And our scale has given us a certain degree of financial resilience. We have the subscription fee model, which is regular income coming in, but alongside that, we've had the record trading days and we've had the infrastructure to deal with that. In particular, even this week, we were tested again. So Monday was a massive day for trading and our platform held up well. In terms of Manchester, we really have been investing in Manchester. So far this year, we've had a total of 160 people there, and that has been across entry-level opportunities, so customer services, operations, but we've also had some senior hires, very significant ones, such as our Chief Commercial Officer, Chief People Officer, etc., and the Head of Talent. And we will continue recruiting into 2021. So there are currently 65 roles on our careers website. And we're also going to start developing our early career infrastructure. We'll be supporting students in accessing experience within the business as well. As you can see, our Manchester office, I didn't want to go gratuitously into lots of shots of it, but it's rather lovely, and we've made sure that it's a very pleasant and light and spacious place to work. So when we eventually return to the office, it'll be very much appreciated. So looking to the next 25 years, what we will be doing is investing in more guidance to help investors make these important decisions around their finances. We'll introduce more choice in terms of investments, and we also aim to deliver more tools to help investors navigate the difficult decisions that they have to make. I hope that gives you a good summary of what Interactive Investor is about.
Thank you, Moira. Actually, you were based. I know you had an office in London because my startup was just along the corridor from yours, on the, I think it was the 3rd floor at the WeWork down at which is. Do you still have an office there?
London, yes, we do have an office still there.
Yeah, we gave ours up as soon as lockdown happened. We decided we weren't going to keep it up, and we're now 17 of us, but spread all over the world. Oh. So very, very nice to talk to you. It's a difficult space, right? This is a tough space because you're making recommendations to people in the face of what is quite complicated information, and not just complicated information, but complicated, if you like, sentiment by people. People don't make decisions very well. How is it that you have created, when you pick your top 60, I think it was?
Yeah, we call it our Super 60. Yeah.
Super 60, right? So one of my gripes about the likes of Hargreaves Lansdown is you got what? 25,000 share classes you can go and select on Hargreaves Lansdown, and given the trust in the marketplace with their recommendations, it means that I've got to select one from 25,000 if I want to buy something. So what kind of analytics are you using to help guide the consumer to making a better decision about what they should and shouldn't acquire?
Okay, so we do a lot of quantitative screening of funds and investment trusts and ETFs. So we screen all the available options and whittle down that way. And then we have a selection process whereby we try and serve up the best in class for each asset and for each investor need. So we'll have an income option, we'll have a core option and an adventurous option within each asset class. And so there's a very in-depth screening process. We use Morningstar, our fund analysts have that as a tool to help them, but they also go out and interview fund managers too. And the whole process is subject to very rigorous governance. In fact, we've elevated that this year, was the start of this year, to board level. So we have an exec committee that has oversight of the selection process and make sure we follow the methodology.
Well, as I understand it, Hargreaves Lansdown had an executive process to select Woodford, which didn't work out too well for them. So I'm interested in the differentiations here between your quantitative and qualitative framework and the one that Hargreaves Lansdown might have used. Julian's going to be kicking me because I'm potentially being rude about one of the sponsors of FinTech West, but hey, don't get in my way and you won't get kicked, right? So how would you have filtered out Woodford where they didn't?
We didn't have Woodford on our list.
Yeah, there you go. You did it. So yeah, that's the
We didn't
perfect
have-
answer.
In fact, it was when TD Direct Investing didn't have it on their list. They'd removed it about 3 years in advance of the scandal, and that was because we thought it was risky, because it had those startup companies within an income fund. It didn't seem to be looking like it was filling its remit. And there were better options out there.
Good. I mean, you've answered my question. It's perfectly reasonable to
Is,
say that, you know, we recognised him as a problem early on, and you should be proud of that. So, congratulations, Julian. Julian's face there. He's going to kill me. All right, I better stop the questions there. He's giving me the prod which says running out of time, Chris. I could ask you questions all day, Moira, and I'll be back in contact with you to ask you more.
You're in one of Chris's favourite sectors, you see, Moira. So you're always going to get more questions from him because he knows this stuff inside out. Thank you very much for that. Great to hear from you. And obviously, a very different profile of organisation than the first speakers, where we're talking to startups. So thank you. Mark from Infinity Works is going to now give us another different perspective from another pretty established organisation. Mark, are you there?
I am indeed, yeah. I'm just sharing my screen, which I hope everyone can see now.
No, not yet.
Not yet. Okay, bear with me.
Okay.
We all good, Julian?
Yeah, go for it, Mark. Thanks.
Perfect. Thank you. Yeah, so just to introduce myself, so I'm Mark Melvin. I'm one of the directors at Infinity Works. So we're a different type of profile of business again to the previous speakers. So we help organisations to build these fintech products. And what I'd like to talk about today is some of the considerations and learnings that we've had working with different types and profiles of companies on building their fintech products. So the insights comes from that experience that we've had, and I'm going to use a recent project as an example to do that. But before I go into that, just a bit of a background about Infinity Works in terms of who we are. So as a business, we're a collective of engineers, technologists, consultants, and we're established in 2014. And we've now grown to over 400 staff, and we work across 4 primary locations. So Manchester being one of them, and it's great to hear all the other work that's happening with the businesses in Manchester, Leeds, Edinburgh, and London are the other locations. And we basically exist as a business to help customers with the biggest technology challenges that they have. So that's what we do as an organisation. And since we started, we've really tried to differentiate ourselves as an organisation, as a consultancy, to be much more of a partner to the customers that we have rather than a supplier. And we do that by putting the customer at the centre of what we do, always recommending the right decisions, not being linked to a particular technology vendor and pushing people down that particular path. And our great people that go alongside that and support the work we do. So over the last 6 years, we've grown really organically and built lots of really good long-standing customer relationships across a variety and a range of sectors. Some of the examples you'll be able to see here on the right-hand side. So, you know, the NHS was our first customer and is still a customer today. But if you have ever, you know, used a Nectar card in Sainsbury's and got a promotion, that was a platform built by Infinity Works. Or in the good times, if you ever went to Manchester Airport and booked some car parking online, that was something done by us. I'm sure we're all looking forward to doing that again at some point in the future. But there's also a real sort of strong finance background that we've got as well. So you'll see here some really exciting businesses like Starling Bank. So we worked with them to build their payments platform. But also to do a number of projects around the Making Tax Digital engagement that the UK government launched. So a real variety and range of customers there. And the benefit that we can bring to those from working across those sectors is bringing the best of those industries and the new innovation that's happening to those customers. But the client I'd actually like to just use as an example, really, with some of the work that we've done and talk about today is Asto. So Asto is actually part of the Santander Group. And this was a spin-up out of that organisation. And the whole premise behind Asto was to help small business owners to be able to manage their expenses, their invoices on the go using applications and their website to make it much easier and take away some of the headaches around those particular workloads and processes so they could spend more time focusing on the things that matter to their businesses and growing their businesses. So what Santander wanted to do was basically increase the pace of innovation that they had as a business. So they wanted to take advantage of technology like cloud, something that's more maybe associated with the work that happens in the fintech world and the pace that can be delivered. But they wanted to balance that with obviously being a multinational company. And they really had to think about how an established bank could leverage their size, capability and capacity, but also operating at the speed of a startup. So we actually joined the project 6 months out from launch, and our aim was to really work with them to be able to deliver the platform for launch, but then also be able to release and bring new features to market in a really quick way once the application was actually launched. So what we did was we started working by breaking down the product and some of the features they were looking to bring to market into much smaller items, so we could bring that technology in a much faster, streamlined way, a way that I'm sure a lot of the fintech businesses on the call recognize. And the team actually managed to achieve 12 production deployments per day, and most features went live within 48 hours of a developer starting to work on them. So it was an incredibly quick project. Now, while pace is obviously fantastic and really important, the ability to be able to deliver these to ensure they're robust and reliable was absolutely critical as well. So we had a lot of automated testing, and we used the human element to deal with some of the problematic edge cases. And obviously security was an absolute fundamental part of our system design as well. And we made sure there was updates and testing for every code change, and penetration testing on the app, the website and the APIs. So really bringing the best of both worlds to the particular project with Santander. So in terms of an outcome, we actually had a team of 10 people from InfinityWorks working alongside the Asto team, and we managed to get that application built and deployed. And ultimately, we released 1,400 new features and services, and new features and updates across around 40 microservices. And we did all that while maintaining a really high level of security and ensuring that we were in line with compliance of banking regulations as well. Some great statistics on the screen in terms of the usage of the platform. So, tens of thousands of SMEs now using the service, and good volumes going through the platform. And also now Santander looking to take that on a global rollout and use that process of what they've learned. So that was it from me, relatively short and sweet, but I hope that it was a useful insight to some of the work that we've done. From our point of view as an organisation, we're always happy to engage with other companies that may be going through something similar or just want to leverage some of our insights and advice. So very much welcome the opportunity for a follow-up if anyone wants to talk to us in a bit more detail. And just a big thanks to the team at FinTech North for inviting us along and being part of the community.
Thanks, Mark. My question is very simple, actually. As you are a horizontal capability and see whole of market, what's the most common ask you get? What's the thing the most common build you have? What is it that people want right now? And maybe even just give us the evolution of that demand.
Yeah, so the big focus of demand across all sectors at the moment is data and how to manage and use data more effectively. This is the same with insurance companies that we're working with, and insurance companies who have been taken over by big investment groups and now want to use and leverage the data in a much more effective way. And then you look at some of the other sectors like retail, and how we can use data to drive loyalty and keep customers engaged is absolutely vital as well, and making things more personalized when you're approaching consumers. So that is absolutely the big hot topic at the moment within the market that everyone's coming to us for. I think you look 2-3 years ago, organizations were initially on the journey with cloud. I think, a lot of organizations are there in some form with that now, and they're maybe looking to evolve that and manage it better. But data is absolutely the key one.
So cloud to data to what? What's the next big thing?
Well, the next big thing is an extension of data, and it causes great debate in our business with our customers as well, is, talking about machine learning and AI. They are absolutely the key next steps, and really what those uses of technology are about, though, are using data effectively. And a lot of organizations want to maybe leap to those because of the interesting terms in the industry. But actually the core part of that is really getting a really good understanding of your data and how you want to use it to make decisions in the business. So we very much see that area as an extension and the next process along in the data world, but it's one that causes a great debate across different industries.
It's interesting. It's interesting because I completely agree with you. I think that is the next big thing. I'm surprised it causes debate though. What do you think is making people internally hesitant about going down that path? What's the issue? What's the challenge?
The issue and the challenge is, I suppose, what are we going to do with that information? How are we going to implement that to our customers to drive efficiency? I think you've had that initial leap of people being, attracted by the technology, and it all comes down to outcomes and driving value for businesses. And I think from the C-suite that we're working with at the moment across organisations, they're all challenging the teams to be more data-driven. But it's actually, what does that mean? What's the actual impact, and how are we going to enforce that within an organisation? And I still think that there's a way to go with that. There's a lot happening in retail at the moment. I think similarly, we might see this with some finance organisations about blending that in-store experience or that branch experience with online. But how do we do that, and what data do we need to be able to drive those decisions? So I think everyone wants to go down the path. It's how we implement and how we do that effectively.
Okay, perfect. Thank you very much indeed.
No problem. Good to speak to you.
Julian, over to you.
Yeah, thanks, Chris. Thanks, Mark. Good to hear from you. Good session. I'd like to introduce Rich now from Mutual Vision. Hi, Rich.
Hiya.
How are
Thank you. Thanks for that. Yeah, I'm good. Thanks, and you?
Yeah, very well, very well. Right, the stage is yours, so to speak.
Okay, I'll just see if I can get this to share.
Looks like it's working. Great.
Okay, can you see that?
Yep, all good.
Great. Okay, well, just to introduce myself, I'm Richard Wainwright. I'm the CEO of Mutual Vision, which is quite an unusual business, not like any of the other ones we've covered today, but I'll go into that in a bit more detail. We're a business based in Wilmslow, just outside of Manchester, when we're all in the office. So as far as the company is concerned, we've got 25 customers, and we're focused primarily on providing a core banking platform to banks and building societies, so small banks and the small to medium-sized building societies. And the functionality that we provide really is predominantly focused around loans and savings. So we've got the core banking platform, but also some digital products as well, of which we've got 50 plus installations. And that covers things like online banking and the broker origination platform. But underpinning all of that is a new integration and analytics layer that's all been built in cloud in Microsoft Azure. And that's really what I wanted to talk about today, because that's the basis for our digital ecosystem. So just a little bit more on our customers. We've got, as I say, 25 customers. We've got over half of the building societies in the UK, one overseas, and also a couple of banks in there. But very much our focus has been historically the building societies in the UK, the small to medium-sized building societies. And what is very different about us is our unique ownership structure. So unusually, we're actually customer or community owned. So we're owned by 6 of our customers currently. I'm actually wanting to expand that out to more and more of our customers over time, because I think that's a really strong and powerful model for an organization that provides a digital platform to its customers. What it does mean is that the objectives of our customers and our shareholders are 100% aligned, because effectively they're the same people. So all of our profits get reinvested for the benefit of the customers and for the development of our own products, but also the platform and the ecosystem and the partnerships going forward. So just a little bit more about that in terms of strategy. We've adopted what we call the digital mutual strategy, because what effectively we're doing for the building societies is we're enabling those small building societies to afford digitization by pooling their investments in technology in the same way that they pool their members' savings to enable them to buy houses. So it's the same model, we're just bringing it into the digital arena. And what we really focus on is building that digital platform, that ecosystem, developing that over time, bring more and more tech partners in that can add value to our customers on top of our digital platform. And we work really as the systems integrator using open APIs to enable that to happen. And we provide very much a collaboration hub, not just from a technical point of view, but we also do a lot of things like community meetups with the customers. We help them navigate things like the regulatory landscape, think about cyber security and all those related areas about running their business. So we act very much as their strategic technology partner. And one key element of that role as a strategic technology partner is actually navigating the whole fintech landscape. We've heard a lot of figures today about how many fintechs there are out there, how many different companies, and most of our customers don't have the bandwidth internally to be able to navigate that themselves and work out who are the right people to be working with going forward. So we do that horizon scanning to a certain extent with them and work with them, but also encourage them to provide suggestions as to who they want us to work with as well. And all of that is really underpinned by the values-driven mutual ethos, aligned values with our customer community. So just some of the people that we're working with currently, this isn't a full list, but it gives you a flavour for the kind of areas that we're working in. And we're talking to about another 20 different organisations at the moment about coming into the ecosystem and building on that. And it's different types of arrangements for different types of organisations that we work with. But really, my call to action today is to ask if there's other fintech providers, regtech providers, lendtech, that you feel that you could add value to our customer base, then we would like to talk to you. And in return, actually, you've got a really good sort of single route into market to be able to get into 22 building societies in the UK. And what we do is work very much in a collaborative ethos, and that goes right into our commercial arrangements. We're very, very keen for all commercial arrangements that we put in place to be a win-win-win situation. Obviously, it's important for Mutual Vision to turn a profit. We don't look to maximize profit because it all gets reinvested, but we do look to be a profitable technology company, but it also needs to be a win for our customers and a win for the tech partners that we work with. That's really what I want.
Rich, thank you. I mean, I can totally see the appeal you're giving your, if you like, digital mutual. It kind of says it in the name. You've got the mutuals, you know, obviously working very, very well with you, the building societies. Mm-hmm. I wasn't quite sure what part of the technology stack you provided though. Do you do the kind of core banking platform, or is it the front end that services the digital front end that services the consumer?
We do both of those. We have products for both of those, actually. So we have a core banking product that's used by 12 of our customers, but we also provide a digital online banking solution and a broker solution that can sit on top of our core platform, but also can sit on top of third-party core banking systems as well.
When you say broker, you mean mortgage broker or
yes.
Yes. Okay. Interesting. And the reason why I'm thinking this is that you know there's a huge attraction, I think, to having a kind of a collectively owned piece of technology, and I often wonder why the big banks haven't kind of sorted themselves out. The most grown-up thing that the big banks did was build Swift,
yes,
which is their equivalent of a collectively owned piece of technology, and it's now a monster in its own right. I mean, it's. You know, it would describe itself in some terms as a mutual because it reinvests all its profits, less enormous bonuses to its staff. But let's just stick with the analogy here. There are risks, and you know, I'm sure the regulator looks at you at the systemic risk of having one coherent platform across, what did you say, 20 plus financial institutions?
Yes. Yes.
Yeah, and how do they get their heads around that, the regulator?
Interesting you should ask that, actually, because they came, the PRA came in to see us last summer, specifically because...
Yeah, sorry about that.
No, it was good. It was really, it was a really good thing, actually, because they came in specifically to look into that potential risk. But what they came to realise is actually it's quite a low risk in reality, because obviously see the building societies as very much core business to us. It is our business. It's our reason for being. Our customers, our shareholder customers, get to see what's going on in the business. They have visibility of what's happening, the risks and the opportunities within the business. That influence and insight is part of what they get as being part of the digital mutual, in effect.
And it's interesting, so as well, from a regulatory point of view, having a single source of information that can help them with their regulatory queries is actually significantly beneficial. I mean, the idea that when they're trying to get some kind of, during the financial crisis, when they're trying to drag data out of the banks on exactly what their positions were, their collateral positions, their relationships, what the lending relationships were between these organizations, they were getting data from everywhere, lots of different systems in lots of different formats. Whereas you would provide it for 20 plus financial institutions in one file that gives them confidence that with people within that network are properly able to understand the mutual risk between them. And I think that's immensely attractive from a Bank of England point of view. Maybe they agree, maybe they don't, but I know Andy Haldane will be looking at this and going,
Well, we go a lot further actually than some of the other sort of core banking system providers in what we provide and what we do to help our customers meet their regulatory reporting demands. So we do know from talking to the customers that we go a lot further than some of the other sort of tech providers do. And we have somebody whose specific job is Horizon scan what's going on from a regulatory perspective. So it's not really putting it into systemizing it. It's also just understanding what's happening and then working with the customers to get their heads around what the implications are for their individual businesses and also for the tech that they use.
Well, I think it's tremendous anyway. Thank you.
Okay.
Julian, back to you.
Great stuff, Rich. Thank you very much. Cheers, Chris.
Rich, could you stop sharing your screen so we can move to the next presentation, please?
Oh yeah, thanks. We've got Mutual Vision speaking at a savings event next week, and also Raisin who are on in a couple of slots as well. Pete from Collctiv, you're next up. We can still see your screen, Rich.
Yeah, I'm trying to get rid of it at the moment. There it is. Hold on a second.
There we go. Correct.
Too many screens.
Okay. All right.
Awesome. Hope everyone can see that now.
Yeah, that's great.
Cool. So yeah, so just kind of give you 5 minutes on Collctiv really. But my name's Pete and I'm the CTO and co-founder of Collctiv. Collective's been around for about 18 months or so. And what we do is effectively make receiving payments from a group of people really easy with our consumer app and also our B2B offering as well. Now, if you're an organizer and you've organized an event or an activity with your friends or family, chances are that it was quite a stressful process. You've been out of pocket, you've got a whole bunch of people owing you money, or you've collected cash, bank transfer, and a whole bunch of different things as well. What our app does is effectively make it really simple to create a pot, send the link on any comms platform, whether that's WhatsApp, email, Zoom, anything really, and then your friends and family just tap to pay and they're done really. But what I want to do today really is kind of go through the last 12 months. Obviously, it's been a bit of a different 12 months, particularly for a startup. And it's kind of how we've managed to grow despite everything that's obviously kind of happened. So this time last year, the consumer app had been out for about 6 weeks or so. And we had a few hundred people using the platform and a few £1,000 had gone through it. And we were really quite encouraged by the initial feedback that we got from people around its simplicity and around what people were actually using it for. Back then, the team was just myself and my co-founder and our dev as well. So we had a team of 3 people kind of launching this. And our plan was to grow the B2C side of it. With later on in 2020 to offer a premium version of the platform where for a small monthly fee, you could access additional features. And in Christmas 2019, we continue to see growth and really see more diversity in what people were using the app for, with Christmas parties kind of obviously being number one. Stag and hen do's been up there along with holidays and baby showers and a few other bits and bobs as well. So 2020 was really looking to be a great, awesome year and can keep going on with that growth. And then obviously COVID hit, and our primary customer markets, which were sports teams and groups activities, effectively became kind of illegal or banned overnight. So that kind of changed our perspective on a few things. Also, we launched our seed round back in January last year. So going through that process with COVID going on, thankfully we did manage to secure 2 investors, which was great, and 2 awesome investors came on board. And we managed to close them actually during lockdown. So it was good to see that it didn't kind of just stop overnight. What we also saw were our users organically using our application for new things, such as buying, shopping on behalf of people that were shielding, and they were using it to collect the money back. Or businesses were starting to use it to take payments remotely or upfront. So using that information, what we did was actually bring forward our development of our B2B product that effectively allows businesses to accept payments from groups, which is kind of perfect for events, companies, or travel and holidays and things as well. So we launched our business app in around June last year, just in time of when events companies were starting to come back to life post kind of lockdown 1. And they were starting to book holidays again, events and activities were picking up, and our platform gave them the ability to offer something a little bit different. It removes the stress from the organizer to have to kind of commit lots of money up front. They can collect it from the entire group of people now rather than just a one person. But we also kind of caught on of, well, okay, so we've got these group of people, but what if we could get a whole groups of people to buy an item? Kind of like crowd buying in a way. So we came up with a product that we call CrowdPay that effectively allows businesses to create kind of unique offers, such as maybe an exclusive item of clothing. However, for customers to get that deal, a minimum number of sales needs to happen in order for it to kind of be triggered, for it to be shipped. So what that means is that customers need to refer that to other people and get other people to buy that product as well, so they can get the item. So they're really incentivized to promote the offer and effectively create organic referral system off the back of that. Now, with other kind of platforms where you can do offers or discounts, you tend to have kind of little control about it, or you have very, very, very low profit margins if you do ever make any profit margins off of that. And when we spoke to a few organizations that use that, they typically made quite a decent loss on that and hoped that they made additional sales on top of it when they attended the event. They sell extra product to actually make the profit from it. But with us, if you need to sell 20 or 30 items to start making a profit, then you can set that as a threshold to actually, before things are kind of fully committed within there. And we've seen a real incredible uptake for people, not just in the event space, but also in retail as well. And one customer in particular saw an increase of 145% on their normal sales, with 90% of those sales coming from brand new customers. And we had a second customer that sold 14 days worth of product in 3 days. So really kind of using that viral aspect of the product to kind of turbocharge their sales, really. So our team's also grown over the last 12 months from the 3 that we started before. We're now to a team of 10, a mixture of full-time workers and part-time. Also brought on a couple of non-execs to have kind of advisors and help us and steer us as we kind of go on this journey. We've also processed over £750,000 worth of payments, just over 8,000 users now, and over now 150 businesses using the platform. So it's been a really kind of exciting and kind of roller coaster 12 months for Collctiv, but the future's looking really good. And hopefully in 2021, everything's looking great with CrowdPay really taking off, but also with the events and activities companies coming back, hopefully that will really pick up strong. And we're already seeing events companies booking things for 2021, and they're starting to take payments earlier now with our platform. So yeah, hopefully we're looking to grow and continue our growth. But if you do have any questions, either ping me on LinkedIn or say go on our website, and you can find all of our contact details there. But yeah, it's just a quick overview, really.
Thanks, Pete. I like it. I love the pivot, by the way. Fantastic. You know, turn a risk into an opportunity. I like that. That's very good. Question for you: do you sweep the cash that you hold overnight into an interest-bearing account or into some kind of overnight cash product?
No, so we don't kind of put it into. We don't effectively, the way we treat it is obviously this is our customers' money. We don't use it to then use.
Banks have no problem with making a spread on people's money, Pete.
No, so. Absolutely. Yeah, maybe at some point in the future we'll offer that as a thing, but our focus is really to provide convenience. Really, there's something that should be really simple of collecting money from a group of people actually isn't even in today's world. So, and also with the likes of CrowdPay to really kind of enhance the virality aspect, that's what we're really focusing on. Necessarily kind of then getting kind of savings on top of that and things. Maybe that's in the future, but that's not.
I'm not even saying about savings. Banks don't offer it back to you as a savings for a zero. In fact, they charge you for an account these days. I mean, what you're doing is you put it in a product that's liquid, that has a low interest rate, but all the pennies add up over time, right?
Yeah.
So
Absolutely.
you know, £1 million worth of deposits on a per day basis will give you 10 grand's worth of additional margin for what is effectively nothing. So you probably want to think about that if you've got a lot of money sitting for days on an account as it slowly accumulates, right?
Yeah, no, agreed. And it's, I mean, as always with the startup, it's priorities, isn't it? At the end of the day, of trying to work out, you've got limited resource and what you can do. And
no, I understand. It's all right. I'm just being a ruthless capitalist. That's okay. Don't worry. But you know, you can be humble about it and share it with people as well. I mean, that's always a good thing. So
yeah, and yeah, I think we probably err on that inside of that, to be honest with you.
Very good for you. Okay, thank you. Thank you very much indeed. Julian, over to you.
Thanks, Chris. Thanks, Pete. It's great seeing the progress with Collctiv, because we've had the guys speak several times. We've had Amy, Pete's co-founder, speak as well. So we've kind of seen the evolution of the business. So always good to see the progress. Well done. We're going to hear from Kevin at Raisin now. Kevin, hope you're with us.
Yeah. Good afternoon, everybody.
You are welcome.
Thanks for the invite. Let me just get on to sharing my screen. You see that?
Yeah.
Okay.
Yeah, perfect.
So I guess, unlike some of the businesses that we've heard from in the showcase, we're reasonably well established. We don't have the years under our belts as NV and Interactive Investor, but certainly in the UK, we've gone through, I guess, some of those early teething pains and created a really strong platform and some really exciting growth opportunities as we go into 2021. I'm just conscious not everybody will have heard of Raisin, so I'll provide a little bit of background, but also more importantly, the progress that we've been making over the last 12 months. Also, in terms of some context, we'll look at the UK market. And then in terms of how, I suppose, the ecosystem of Raisin has evolved, the benefits to the consumer, but also the two partner models that we have operating. So Raisin UK was basically formed in September 17 when Raisin GmbH bought out my old company, which was PBF Solutions. It took us several months to launch, but we launched Raisin.co.uk in the summer of 2018. But if we look at this more holistically in terms of our parent company, Raisin GmbH, born out of Berlin with 3 founder members, it's been in operation for around about 6 years, 7 years. And effectively the founders recognized that German savers were getting a pretty dumb deal compared to, I suppose, some of the other savers across the continental Europe. And because effectively there's one set of guidelines, regulatory guidelines, and back then the business was purely operating under a euro currency, so it's single currency. It opened up that marketplace and grew quite quickly. It effectively has a number of parties in the process, as we do in the UK. So on one hand, you've got the deposit-taking banks, and we have building societies. You've also got the service banks, but we've also got increasingly distribution partners. So across Europe, we partner with over 100 banks. The business has brokered in excess of 25 billion euros. The active customers is actually now up to around about 400,000. So it's obviously growing at pace. And I guess, as you'd expect in recent years, the focus on the FinTech as a sector, Raisin's been deemed to be one of the kind of darlings of Europe, I guess. And in the last 2 years, has been in the top 5 of the FinTech 50. So we're only a couple of years on, but we've got 19 partner banks live now. We've actually exceeded our first billion brokered, so it took us just over 2 years. And you can see the other elements within that list. I think significantly, though, as we build out our product offering, we started with fixed term deposits, notice accounts, but actually this week we launched Easy Access, and we launched with Teachers Building Society. So not only was it a new product, but it was the first time that we'd launched a building society on our platform. And albeit, we're not that established, we've already made our mark with a couple of industry awards been given to us this year. So just carrying on, I suppose, the creds, that the business is well funded. There's some established VCs in there, but also strategic investment from the likes of PayPal, Goldman Sachs. And as you can imagine, again, the sector in which we're operating in, there's a fair amount of media coverage. And that's certainly something we picked up on in the UK, both in trade, but also in consumer. So I guess why cash savings? Because effectively it's been pretty poor, I suppose, market for savers ever since 2007. And this year, as a consequence of COVID, we've seen the base rate drop to an all-time low. But ironically, we're actually seeing more money saved now in cash than we've ever seen before. And in terms of the savings ratio, it's likely to reach record levels this year. But if you think from Raisin's perspective, as it builds out the value of the business, it needs to be far more than just a German-centric platform. And it's operating in 20 odd countries, but with 8 bespoke platforms. As I say, we've launched in the UK and more recently launched in the US. So I guess the market, there's a number of considerations. As I say, I think more people are gravitating to cash. We've undertaken a fair amount of research, and we're seeing that more people during lockdown have realised that they didn't even have enough for emergency funding. So people are putting more money away. And as I say, that's with the backdrop of really poor interest rates. But because we have such a competitive market in the UK, and I'd say our banks and building societies fit in kind of 3 categories. So you've got the incumbents, obviously big balance sheet recognised brands. You've got a plethora now of challengers, and some of those are growing substantially. But we've also brought to the market quite a number of new savings brands. And this is where organisations are all competing now into that retail savings market, but didn't necessarily have the in-house capability. So we've got some exclusive banks that we've launched with, and we've actually got an interesting one that should be launching in the next couple of weeks, and hopefully be coming out with some exciting interest rates. And from the bank's perspective, at the start of this year, there was a real clamour to ensure that the liquidity levels were maintained, but also there were some buffers there to protect against stress on the asset side. So I think generally speaking, I think the competitive in this market obviously helps us to maintain good flows. And what we are seeing now, and hopefully it won't be short-lived, but an increase in borrowing, particularly in the housing market. And the banks obviously need to ensure they've got the deposits on the balance sheet to fund that growth. And we'll have seen this year NS&I make a big mark in the market, obviously representing the Treasury, as opposed to their usual 6 billion a year they've raised. There's 35 billion that they've achieved, but they've already reduced their rates massively. For savers, and this is where I guess the kind of platform in the marketplace differs considerably, say, from aggregators or price comparison sites, where it's a dry list and a click out. What we have is a closed loop operation where the individual comes in from various sources. There's one application form, and then the saver can actually have one verification, and they enter into a secure environment where they then can select a range of products from different entities, and they have access to an online banking system, so they can operate their portfolio of deposits all in one place. We restrict savers to £85,000 per deposit to bank, and that also adds a degree of protection because clearly it fits in the FSCS levels. And so if anybody does come to the platform with significantly high level of savings, they can easily spread that risk across different organisations. And just picking up really on what I said about lockdown, it's been really interesting for us. I was personally somewhat fearful that we're going to get a repeat of 2007, when suddenly all of the banks turned off their deposit raising requirements, a lot of quantitative easing coming in, cheap money from the government. But this time it's been very, very different. And I guess the measures taken since 2007 means the banking sector is far more robust, and it's quickly enabled quite a number of banks to get on the front foot and start to, as I say, increase their lending capability. So I mentioned the fact that we have a number of partner models. This is a very simplistic view, as I've explained, in terms of how the marketplace operates. But the depositors are coming in either through raisin.co.uk activity, and we also work with some of the major affiliates. But increasingly now we're looking to expand our distribution partners. But ultimately, wherever the customer it originates from, it comes into the Raisin platform world. We have two service providers. We have Starling Bank, who undertakes the AML KYC. We also offer a number of setups, and one of them is Bear Trust. So Meteor Asset Management is our Bear trustee in that. So from the banks, they can receive the funding they require. We effectively micromanage, so we ensure that we deliver exactly what the bank wants, generally phased in accordance with the requirements and the right product mix, but also in our distribution partners. Some of those we just have a simple lead out, but increasingly now we're looking to develop a fully white labeled solution. And really with that in mind, we've expanded on our partners. We've got some significant names in there, but recently we've now formally launched Savings as a Service. The most recent partner we've launched with is AJ Bell. So we provide their cash savings solution. And we will have another significant distribution partner that should be going into beta phase before the end of the year. And in terms of the numbers of customers and I suppose the assets under management it will give access to our platform, it creates a great deal of opportunity for our deposit taking banks. But the balance is to ensure that we've got the right capacity from those banks to meet the demands of customers coming from these distribution partners. In terms of the onboarding, I guess from a bank's perspective, we acquire the customer, we onboard the customer, we manage the customer relationship and also the maturities and renewals, and we charge the bank basically a deposits, a basis points on the deposits raised. So it's a variable, and for certainly some of the smaller banks, it means they're not having to take on the fixed cost of building their own in-house capability. So finally, really, and as I say, this has come about from our experience working for about 100 banks. I said earlier that it's one set of kind of regulatory guidelines, but as we know, at jurisdiction level and certainly at bank level, these get interpreted very differently. I suppose some of the other platforms in the UK are pretty one-dimensional. They tend to offer a bare trust. It's fairly easy to onboard. There's a single counterparty, but we also provide fully hosted solutions for some organisations, but also we can open accounts at an individual customer level. And where we're seeing now that this is really, I suppose, creating opportunities is in the mutual sector, for instance, where member status is important for the right classification of deposit, then these kind of solutions can work accordingly. So I was conscious of the time, lots to cover through. And as I say, in terms of next year, then there's a few key products on the roadmap. We're looking at doubling the number of partner banks and doubling the number of distributors. Our parent company has already embarked in things like investments. It's also acquired an online pension company, but as I say, they're kind of 6 years in the making. I think that's some way off for us in the UK. We're very much focused on getting to that next billion, I guess, brokered, and hopefully we can do that in half the speed as we did the first one. So thank you very much.
Thanks, Kevin. I'll keep my questions brief because I think we're kind of cutting short on time. But actually, I'm interested. I've just been looking on your platform online, and there's a thought that occurs to me in the way that we heard from one of our earlier speakers about the need or about their way of sifting and prioritizing the products they recommend. Although this was in the equity space, do you provide any analysis to the consumer, which, other than based upon the rate of interest and who the bank is and which financial services compensation protection scheme it operates under, do you rank the banks? Do you sort them? Do you make a recommendation? Do you say this is our 5-star, 4-star, 3-star recommendation, other than pointing out the rate of interest?
Not so much in the UK, and try not to be disrespectful to UK savers. Certainly in Germany, I think there's a far more sophisticated approach, and particularly because it's pan-European. So assessment on the credit rate in the bank, but also the credit rate in the sovereign state is a big factor.
Yeah, that's kind of where I was going with this, and also kind of ethical considerations as well. I mean, there must be some of the organisations you would go, okay, do I really want to be investing in that country?
Yeah, UK is purely, well, predominantly UK banks. We do have a couple of overseas banks. And as you rightly say, we have to point out that whilst there's a deposit compensation scheme in place, it's not backed by the UK government. And what's been interesting, even though I suppose we've got Brexit on the horizon, effectively we're still seeing interest from European banks that have got a sterling balance sheet requirement, and that seems to be continuing. But I certainly think it's something we will look at. You mentioned ethical. We've got a number of Sharia banks. We've got building societies now. The interesting thing is not everybody chases the best rate. So if you look at the volumes we have and the products and banks that we have, there's generally deposits going to maybe half a dozen different entities. And it clearly shows that people are actually selecting on more than just price.
Yeah, it'd be interesting to get under their skin and figure out what else they're selecting on and helping them with that decision-making criteria. Yeah. I know that when I looked online, I looked at the top one and thought, that's a massive rate compared to the others. And then I looked at other factors around it and I thought, probably not.
Yeah.
Which was, so getting inside that kind of subjective reasoning that I have in my head, I'm sure you'd have the same criteria yourself, would be significantly useful to the consumer, I think.
Yeah, and I think to be fair, and just to finish on that, the biggest challenge we face, although we've got a lot of competition, is the kind of apathy and inertia that exists. So one of the reasons that we try and make it very simple in terms of single sign-on, single customer onboarding is to overcome that. But as I say, once somebody's actually into the marketplace, their ability to cross-sell and increase wallet size does build up quite significantly.
Okay, cool. Thank you very much indeed.
Thank you.
Thanks, Kevin. Okay, last but not least is Open Money. To everyone who's on the webinar at the moment, you see we're running a bit late. We'll be starting a Manchester panel after we hear from Rich at Open Money. Hopefully you'll be able to stay with us for that one. We'll go a little bit over time to make sure we have enough time to have a good discussion on the panel. So Rich, over to you. There?
Yes.
Good. Right.
Everyone can see my screen.
Yes, perfect. Thank you.
Cool. So afternoon, everyone. It's been really good to listen to some of those showcases and really pleased to be taking part in this. I'm Rich Jones. I'm the Principal Product Manager here at Open Money. And I'm just going to be talking a little bit about who we are, some of the problems we're trying to solve, and also some of the interesting stuff that we've been getting up to this year. So to start with a bit of background as to how Open Money came about and our ultimate goal. We were born really out of a growing problem within the UK, in that millions of people up and down the country are facing significant financial challenges and are sadly typically facing these challenges alone and unsupported. And crucially, it tends to be these people who have the least access to sound, impartial and personalised financial advice, which could significantly improve their circumstances and then ultimately their lives. And at Open Money, we refer to this problem as the advice gap. And for the last couple of years, in partnership with YouGov, we've been publishing an annual UK advice gap report, which includes extensive research on the state of UK residents' financial lives across all ages, across all life stages, and all levels of wealth. And really at Open Money, our core mission is to bridge this advice gap and ultimately make personalised, trustworthy advice as accessible as possible to those who need and want it. So how do we go about doing that? Well, in a nutshell, we're leveraging technology to bring the wealth and knowledge of our and experience of our financial advisory team to consumers through accessible and engaging channels. So for many of our users, one of the best actions they can take is to invest, to ensure that they're making the most of their money and that they're planning for their future. And so these users are guided through our advice-led investments journey and through the entire process of investing their money in the right way, without any need for them to have any prior knowledge or experience in investing. However, for a lot of our users, we actually don't recommend that they start investing based on their current circumstances. In actual fact, for many of these users, the shorter term priority is for them to focus on improving their current situation through things like reducing total outcome, building up savings, and reducing their total debt. And obviously those things are a lot easier said than done, and that's where our Open Money app can help, which has been a key area for us, a key area of focus for us this year. and is what I was going to focus on a little bit today. So the overall purpose of the app, and there's a video of some of the screens running there, was to really offer users a one-stop shop for all their financial needs. So providing users with all the information they need to understand their current situation, providing some interesting tools, features and insights into how they could possibly manage their money better and more easily. And then crucially, the provision of that impartial, personalized financial advice on how they can genuinely improve their financial picture based on their overall circumstances. And so if we break that overall goal down, firstly, we need to gather a holistic view of the user situation. So that means providing the ability for them to add all their various financial products from their current and savings accounts to their mortgage and credit cards and various other product types. And so that's really one of the app's core features, is to allow the user to see in one place, one screen, all of their financial products and balances, and then to be able to drill down into each of those and see some more detail and interact with each one. And then from that kind of holistic view that we've got, we're able to analyze and provide insights on users' financial habits. A lot of these tend to be around the various spending patterns that users have, which typically highlight to the user some behaviors that they could potentially improve, but just haven't necessarily noticed or realized themselves yet. And then from that insight, we can start to provide some of that personalized and actionable advice that's going to help them move towards a healthier financial situation. And that advice comprises of both some short-term advice, such as, by the way, you're spending a bit on coffee each month, and also some longer-term advice around how users can better manage their cash flow between accounts, and how we could help to reduce their energy bill if they're paying too much. And then finally, based on that advice, we offer the user some tools to actually go ahead and follow up on the advice that they've been given, such as setting a monthly budget, helping to calculate and track against a realistic savings goal, or actually switching our energy provider for them if we think they're paying too much. So really about helping to provide the user that full suite of information and tools to move their overall situation forward. And so, as I said, the app's been a key focus for us this year, and it will continue to be going forward. We've got a lot of exciting and valuable features planned for the new year, not just within the app, but also our other channels. And these will hopefully further extend the amount of things that we're able to do to help our users achieve a better situation from a financial perspective. And obviously that's something that we're really excited and passionate about. So short and sweet, hopefully that's something that many of you found as interesting as we find. Thanks a lot for listening. More than happy to take any questions that anyone may have. And also please feel free to reach out to myself or Anthony or anyone else at Open Money on any of that stuff.
Okay. Thanks, Richard. Question for you. You're kind of tapping into the area where I'm rather strong. Pensions, right? Pensions dashboard. So what you've got there is an application that will help people uncover the value of their pensions. I've got 5 of them. Unless I tell you them, how do you find out what they are?
So at the moment, we're relying on users actually telling us about them, unless they've got a pension through us. We're still refining our user journey to try and make that experience as slick as possible and as motivating as possible from the user's perspective. So it's something we're working through, but at the moment, yeah, we're relying on the user to provide that information.
And given that most pensions are still, I mean, I say most, quite a lot of them, they have no digital footprint. You know, you still get reports which are physically delivered. How do you port that information into the portal for a pension fund that's with some legacy provider that's held not within a digital API-able system? Because I presume you're using APIs to tap into the information to get the information back. Did you just have to take that as well, we can't do that one?
We work with a third-party provider who's got quite a few different capabilities into how they can access some of the providers' data, even if they're not set up through open banking or APIs. So whilst we don't have a huge amount of pension providers, we do have quite a few. So hopefully over time, that's something that will improve further.
Yeah, I mean, the pension dashboard, I mean, you know, that's the obvious place, but the pension dashboard is 2 years away. And that was you know, this is after 5 years of trying to get to 2 years away. We're now still 2 years away. So it's a complicated thing, and the providers are resistant, extremely resistant to giving up the information that will allow people to port their pensions. So I kind of heart Pension Bee that's been right at the front of this consolidation and transfer of pension journey. So I support you totally. I think it's a very difficult space, but well done where you are so far. So anyway, thank you. Julian, back to you.
Thank you, Chris. Thank you, Rich. Good to hear from you. That concludes the showcase. So thanks to everybody who's joined us to speak on the showcase. We now move into the closing session of the conference today, which is the panel on Manchester. So the panelists for this afternoon can put your photos on. Looks like you are doing, Rachel and Kimberley and Mark, and anyone who's on here who's one of the speakers from the previous session, you'll find that you're being switched to attendee status now. Okay, right. Hi everybody. We're running a little bit behind time, as you can see. So thank you for your patience, and thanks to everyone who's still with us. I notice my head's doing funny things in the light with that thing behind me, so I think I'm going to remove that in a second. I'd like to introduce the panelists who we've got joining us. So we're going to have a discussion now specifically around Manchester. We've spent the day sort of zoning in from the UK to talking about payments, open banking, open finance, data. We had the UK FinTech panel earlier, and now we've just heard from a number of organisations, different shapes and sizes from Manchester, or the Manchester region. I'm going to ask you all to introduce yourselves. This session is kindly sponsored by Verlingue. So Mark, I'm going to ask you to introduce yourself first, if you don't mind, and then Rachel and Kimberley afterwards.
Yeah, no worries. Thank you very much, Julian. Firstly, it's Iran, so it sounds like meringue. So, it's the French, our French heritage. Good afternoon, everyone. It's Mark Robinson. I'm Sales Director North at Verlingue. We are a corporate insurance broker, a national corporate insurance broker, and we're based in Manchester with operations in London, France, Switzerland, pretty much everywhere across Europe now. I'm also the co-chair of the Pro Manchester FinTech Committee, and it's my pleasure to be involved in this afternoon.
Thank you, Mark. And let's have your co-chair of the Manchester FinTech Committee next, Kimberley.
Hi, thanks, Julian, and thanks again to everyone that's still watching. I'm Kimberley Waldron, co-founder of Parlour, which is a PR and marketing agency that's been focused on the international fintech market now for 11 years, which I can't believe, but 11 years this year. We started life out in Wilmslow, and we've been based in central Manchester for the last 10 years on Princess Street out of Accelerate Places. And we also have an office in London in White City. As Julian said, I'm the co-chair of the Pro Manchester FinTech Committee. I'm pleased to be here with Mark as well.
Thank you. And Rachel?
Hi, I'm Rachel Eyre. I lead on our FinTech activity at MIDAS, which is Manchester's inward investment agency. Now, for those of you who don't know, MIDAS is funded through the Greater Manchester Combined Authority, and it's our role to promote Manchester as a location for businesses who are expanding, consolidating and relocating operations. And we put forward the case for them to come to Manchester, and we support them through that process. And we position Manchester as that global FinTech hub as well internationally.
Thanks, Rachel. Thanks. And yeah, the idea for the kind of the construction of this panel really came from the Manchester FinTech Committee, which was a relatively new development, which predates lockdown, but not by too much. And we thought there'd been some really good conversations taking place in that group, and this would be a good chance to kind of air some of those. We've also got Chris with us on this panel as well.
Oh dear.
Before we kick off, I was gonna. Well, you've been with us the whole time, Chris. Thank you very much.
I was going to lead by taking the mickey out of your French pronunciation, Julian. I mean, really, you know, your school was closer for you than it is for me. You've got no excuse.
I can only apologise. I mean, I must have said it and heard it enough times that sometimes you just can't remember how a word's said, and possibly the result of a long afternoon staring at a screen. To kick things off, Kimberley, maybe you could just give everyone a bit of background to to what the Manchester FinTech committee panel is and how it's kind of taken shape?
Yeah, definitely. It's part of the Pro Manchester sector group. It started off, I think, Mark, who's also involved with the tech sector group, FinTech just started to become such a life of its own that it was decided we need to set up an independent sector group, which was launched, I think, back in 2018 now, with a very well attended event, which was held actually at Accelerate Places. And the committee initially, as with all you guys, Julian, you've been, it was oversubscribed completely. I think that it's testament to the need for kind of a steering group that there were over 40 initial members of a committee, and we all did sit down together. I don't think we ever managed to fit all 48 as it was, I think, in a room together, but one of the first orders of business was to kind of figure out how we could trim down the committee, because we had so much interest in the FinTech panel. But working together with other members of the committee, we kind of decided, look, the most important thing here is that we do encourage collaboration, that we create a home. I know Rachel's particularly keen on that we create both a physical and I guess virtual home for anybody within the FinTech sector in Manchester, and for those wishing to get a taste for it or potentially moving their operations there. And that's what we are now still in the process of creating. We've created a little bit of a SWAT team with other members. We've got members from Raisin on there, we've got NCC, we've got TLT solicitors. So we've kind of got this SWAT team together now where the plan is that we create a manifesto and we deliver on that. And part of that will be encouraging more FinTechs to be part of the community. I mean, obviously financial services are a huge sector for Manchester, but it's matched by the professional services businesses that are there to serve that sector. And I think what we want to do is create a home where everybody collaborates, shares information, shares ideas, comes together physically and virtually. I don't know if Mark or Rachel have anything to add to that.
Yeah, I mean, you've hit the nail on the head there, Kimberley, to be fair. I mean, it is all of that. It's about that collaboration and sharing that expertise, that knowledge, that advice. And the ultimate aim of that altogether is to open up the opportunities across Manchester and those connections for all that are going to be involved. Effectively, it's all about support and development in the sector. So if we can get together a room or a panel full of people with various sector expertise across FinTech, then it's really going to help drive the economic growth across the region. Or that's the plan anyway. So yeah, I agree with everything you said there, Kimberley.
I think a key word would be signposting. I don't know if that's in absence of a better phrase, but to be, signposting people to FinTech businesses, to the right creative services, to the right governmental support in the region, to the right investment community, and also, having FinTech's input to what that looks like. At the moment, the FinTech panel is we do have FinTechs, but I think it's encouraging more businesses to be involved in that whole community.
Sure. And Rachel, so looking through the people that we heard from in the panel this afternoon, we had banking, we had mortgages, we had investing, we had tech, we had a sort of tech platform for lending and savings, we had payments, we had savings, personal finance management. I mean, you sort of spend your life selling Manchester, don't you? Because that's your job. So how was that reflective of what you see the ecosystem, or did we just have a bit of it this afternoon? How would you articulate it externally to people?
I think what we will say to companies is the biggest strength of Manchester is the depth and diversity of Manchester's FinTech sector. So I think your research showed that there were 108 FinTech firms or financial services related firms with a base in Manchester. But I think Manchester's biggest strength is that it's not just siloed into one particular area of FinTech. We've got strengths across the whole board. And coming back to the FinTech committee, we've got such a strong professional services community, a network of funding agencies, all the elements of the FinTech ecosystem are there. So it's really about bringing it all together. But I think the selection of FinTech companies that you chose for the last session, I don't know whether it was deliberate or accidental. I think that perfectly encompasses the variety of fintech firms in the region. And it was a really good showcase of the different strengths and abilities across Greater Manchester.
That's good to hear. I'd say it's partly self-selected, that group, because we put out a call to say if anyone wants to be part of the showcase, come and claim a place. And so really, I guess it sort of formed itself. Yeah, the report that you referred to was published earlier this year, and that identified Manchester as the biggest of the regional fintech ecosystems in the UK. Obviously across the north, we've got other ecosystems as well. The Liverpool, Leeds, the northeast are all other vibrant areas, but Manchester definitely kind of is the most active. And I think one of the reasons for that is obviously the size, but some of the core strengths that Manchester has in areas like e-commerce, which spins out into retail finance and payments capabilities, and also the big investor hub that Manchester has. Chris, from your perspective, you've visited Manchester quite a few times over recent years, and many other places as well on your travels as a crusader for justice for independent regional fintech. But what's your kind of overview? Sorry.
One of the things I noticed that the FinTech panel has done their analysis, and as I say, you supplied some input to it, and they've identified the Manchester Leeds region, the strength as being lending, reg tech, and business banking, and I think that's quite a narrow view. So I'd be interested in what people here would say they saw their key strengths are, not both from a horizontal but also from a vertical perspective. What are the things that define fintech in Manchester? What's your flavour? And I kind of want you to iterate it so that the audience can hear it as well, but also so that we can make us draw a line in the sand. This is what Manchester's good at. Whatever you tell us we're good at, this is what we're good at. This is where we're going. So what would that be?
From my perspective, I think the payment sector is really, really strong in Manchester. We've got a lot of our homegrown companies in that space, with people like Access Pay, as well as companies like Marqeta, who we heard from before, who have chosen Manchester to expand their operations. So I'd say payments platforms is another key one for us. So people like Nevo, like Interactive Investor, who are building up their software capabilities in Manchester and delivering that. And then I think payments and platforms are the key ones for us. But like I say, we've got a really varied and broad sector. So I wouldn't want to just silo us into.
Well, okay. The thing is, you might have to, right? So let's think about this environment. So I've had a few firm discussions with some people about this, and it's all very well to aspire to want to do something, but there's a couple of reasons why that probably isn't going to work. The first of which is you're probably cutting the grass of someone who truly is an expert, and when you've got something you're good at, it seems unfair to cut the grass in an environment of limited resource to cut the grass with somebody who's genuinely good at something. Secondly, when there is limited resource, the most effective use of that resource, given this hypothesis that's developed that there is gravity to a particular skill set. In other words, you tend to attract the things around you that you're good at already. If you as the government are going to provide incremental funding to something, provide it to something that it's going to make it, that's going to maximize its utility. So the question I would have is, if there was resource to come from government, if there was resource to come through this analysis that's going on, what would the things that you would want to see funded? What is the thing that you think you should really focus on to grow? Not the MIDAS view of the world, if you'll excuse me saying that, which is, we want to have the opportunity to bid on every contract and be equally presented. And I quite agree with that point of view. But if you had to pick a winner, what would it be?
I probably would say payments, because it really builds on our financial services legacy. And it's quite reflective of what both the companies like Barclays and RBS doing from an incumbent point of view, and that expertise is really feeding into the next generation of fintechs. And
it's the next generation. That's about, precisely. What about Mark and Kimberley? What do you think?
I would agree on the payments side of things, and perhaps answer from a slightly different perspective of, rather than regionalizing things, thinking about it in a more of a complementary perspective on a national level. And I think we work with a large online payments platform that has offices in Manchester, and we work alongside another agency. And the reason that we work together is because they have large international ambitions, but as you mentioned, Chris and Rachel, what they're doing in Manchester complements the other sectors that are present in the space, such as SME, strength in the SME market, the strength in the e-commerce market, and they have a strategy to be closer to their customers. And part of that is being on the ground regionally. And I think that it's what we do as a region to complement what's taking place in the UK as a whole. That helps, and that's why payments is so strong. So I couldn't disagree with Rachel that payments is a winner, because it's already happening, it's already taking place, it's already seeing success, it's already profitable. So it's a big strength. But then there's the breakout technologies from the banks and the talent that's been present in the banks in the space as well. Things like Nevo, for example, is a great example of some specialists breaking out of the space and getting investment to produce something that's niche.
The reason why I asked the question, by the way, is because you will infinitely increase your chances of getting incremental support if you can clearly give them something they can hang their hat on. That much I know about government. There's always been a tendency not to pick winners. I think in the new world, they're looking at picking winners. And you've got to identify them to help them on that journey. Mark, what do you think about the question? I mean, do you have a perspective there? What would you feel?
Yeah, I mean, for sort of the want of towing the party line, again, because of the majority of what I do tech-wise is involved in the payment sector, and then everything else that spins out of that. So with payments come the wallets, and then with wallets, you're then looking at the blockchain and people getting into cryptocurrency. I would have to say again that it would, certainly from my perspective, the payment sector does seem to be the sort of strongest area, certainly for Manchester. And again, that view of platforms linked to the payment sector. If we look at again the talent that we have in Manchester for cloud developers, for example. So I think cloud skills, the demand for cloud skills employees increased by about 22% last year. We've got UK Fast in Manchester now, who are UK's leading cloud provider. Again, the majority of all of that I'm involved with is linked to that payment sector. So I think what Rachel picked out and what Kimberley has agreed with, I would also have to agree with from what I see on a day-to-day basis.
I think one thing I would add on, sorry, Julian, one thing I would add on to that is that it's not just looking at the fintech sector alone. We've got to take into account the rest of Manchester's economy. So we've got huge e-commerce, we've got huge expertise in e-commerce. Like Mark mentioned, we've got a lot of expertise around those emerging technologies like cyber, blockchain, cloud technologies. So I think looking at it holistically would, rather than just being very, very focused on what's happening within fintech, we've got to look at what's happening across the whole of Greater Manchester. And I guess we'll get our answer from there.
I think for a couple of things that actually really related to that, the broader capabilities in Manchester, I think the digital sector in Manchester is really strong. And one of the things that our research into the fintech sector highlighted was that the proportion of fintech companies in Manchester who have a B2C proposition was really high. Fintech's a B2B dominated sector. I think it's about 80% B2B overall, but 61% of the startups and scale-ups that we identified in Greater Manchester had some sort of B2C proposition. Some of them had B2B as well.
Yeah, I mean, to be honest, from my perspective as somebody who's floated around and seen, almost everything there is to offer in the UK, what I saw of Manchester is more a set of horizontal capabilities than vertical expertise, if you like, or vertical in depth. You would go to Leeds for banking, and you might go to Edinburgh for long-term savings, pensions, asset servicing, but what Manchester has, it appears to be this digital capability is its core strength, right? So bucketing it as a series of vertical capabilities seems to me not to be the most effective way of defining its capabilities. And I like the payments thing. I mean, that's obviously come out very strongly here, but yeah, I'd seen it very much as this digitally enabled environment. Yeah, I'll have to have a chat about that, I think.
Mm-hmm. Yeah. Okay. Well, and if we kind of consider a few other angles on the conversation, and look a little bit more broadly, Mark, if I ask you, I know you don't just work in this region. You're working on a much wider geographical spread. But what are the kind of trends you've been seeing amongst your clients and your contacts over recent months as we've gone through this sort of difficult trading period through COVID?
Yeah, I mean, one of the main things I've seen through the difficult period we're in is there's been a lot of collaboration with my clients in terms of they're working quite well with sort of across the board with other clients. They're working quite closely with the regulators. So there's a lot of collaboration in terms of trying to develop new ideas, and quite a few of my clients have seen this as a time to try and sort of branch out into other things and really develop the business a little bit more. Certainly we've seen, again, from my point of view, there's been an increase in companies looking to get regulated, companies launching in looking to start getting involved in the FCA sandboxes and developing more there and trying to find different methods of working. And then there's been the overall looking at the very simple things, so looking at spend. So we've got clients that are looking to actively move out of places like London because they just don't need the office space anymore. They certainly don't need everyone in the office at one time. So this is again where we can sort of pitch Manchester to say, okay, well, we do have a good talent pool in Manchester. There's great transport connections in Manchester, and the cost of leases and properties is probably not as high as it is in London. So it's all, again, it's what I've seen over the past sort of year or so now we're leading up to is a period of wanting to grow, a period of wanting to innovate a little bit more, and whereas people may have had the ideas of wanting to innovate a little bit more prior to COVID, I think what the COVID situation has done is kind of force people's hand into that innovation. So that's a real trend I've seen over the past few months.
Do you mind if I add to that a little bit from a happy clappy marketing person's point of view? I think just to add to what Mark said, I think that there's been a massive acceleration in innovation, but I think there's also been a little period of reflection, because if there's been an industry that's kind of had a call to arms during COVID-19, it has been the fintech industry. And I think that there's been so many great conversations today, and so much innovation displayed and longevity, not just people that are new to the market, but we can get a little bit introspective at times as an industry because of the complexity. I guess Chris touched on some of it in some of the panels earlier, the complexity of how the industry fits together and all the different cogs that need to take place. From my point of view, working with businesses on their kind of go-to-market strategy and where they are in the world, there's been a lot of reflection on actually what is our value proposition and how are we changing the world? How are we impacting digital inclusion? How are we aiding financial inclusion? And that's both on kind of the B2B side and on the consumer side. How are we helping? How are we providing access to funds for those that aren't able to do it? How are we getting finance into these SMEs that are struggling during COVID? And I think that's been, I'm so excited to see where we're going next in 2021 as an industry with our kind of flagship messaging. What does the industry as a whole stand for? And I think that's something, as a comms professional, I'd like to see Manchester together, on the back of the report that Whitecap did, on the back of the great reporting that MIDAS also does, is what are we achieving together? And that's something we're going to be bringing into the FinTech committee specifically, is we want to look back at the end of next year and say, what did we do and what did we achieve together as an industry, and looking forward. As I said, marketing and PR person here, but I think that's what excites me, and I'd like to see a bit us looking back in a year's time about what we achieved as an industry and how we improved life for people and businesses.
Yeah, that as you mentioned, that sort of period of reflection as well. We've seen companies start to sort of look more. Kimberley, you and I have had a discussion about it, and it was mentioned in a panel I sat on last week, but that looking at actually sustainability of businesses now, how that sustainability is going to be, how that's going to change moving forward. So our fintech's going to solely rely or mainly rely on external investment for sustainability, or are they going to have to start looking at actually, you know, turning a profit in the early days instead of just relying on that external money coming in? And I've got a few clients that have been really taking this time to focus on that. Where's that sustainability going to come from in the future if we carry on before the end?
And as you say, if obviously investment plays a role in all types of fintechs, whatever stage you're at, but it's what type of investment and what kind of investors are going to help you build that sustainable model. And as we've seen, there's still been a significant amount of investment, and it's picked up again in recent months. But it is what's that sustainable model? What are we investing in, and what are we who do we want to accept the investment from? Has been something that a lot of my clients have discussed. I had a call this week with a large international payments provider that is just about to go through a sale, and we're working on with them, and they have had 7 offers since December last year. And it's I think it was mentioned again on a previous panel, it's, you know, VCs and other fintechs in the market that have got capital, that have got, you know, dry powder is Chris's buzzword, I think, of the week, that have got that dry powder, and how are they going to take that through to the next 2 years?
It's not my buzzword, it's their buzzword. They keep throwing it at me. So there's a few adages about, so having gone through this journey and raised the money over, you know, we're talking quite a bit of money that we managed to raise through the crisis. I can tell you there's a few things that a lot of, you know, it's been great for me to have this strategic oversight for the past 12 years, looking at fintech and its evolution from before it was called fintech to where it is now, regtech appearing, whole plethora of things, and then finally to bite the bullet and start something myself, and then live the process that I've encouraged people to go through, which is to find that funder, to grow, to get the capital. And there's a few things that people don't realize. The first is that in the crisis, at the beginning of the crisis, VCs that had dry powder sat back and thought to themselves, do we want to use this money to fund something new and equally risky, or do we want to keep it to ourselves and then use it for when people have a cash crisis because their revenue has fallen off a cliff? So the idea that you have to find sustainable sources of income is a very, very good one, because I think the days of funding a company that's going to be not revenue positive but is going to be growing as a brand are now fading. The idea of being the TransferWise that has very, very rarely made profit and yet is now worth hundreds of millions of pounds, despite having no real profitability for a very long time and fueled by Barclays payments, but has got a fantastic brand. I think that world is now diminishing. People want to see the money, they want to see where the income is. And there's another one which is very important, which I never had really appreciated until I was forced to think about it, is that as soon as you take money for the VC, you're on the path of not being able to sell until you hit £100 million valuation. So the way that works is very, very simple. If you raise £1 million and you give away 10% of your company has a notional value at that point of £10 million. And VCs only invest in you. They invest in you on a weighted basis, right? That you're going to increase the value of their investment by a factor of 10. Now, there's a whole journey of Series A funding and other funding between that, but let's just think about that seed round. What that means is that you have to give them £10 million back for the £1 million that they have given you. Ergo, the valuation of your company at point of sale must go from its seed valuation of 10, 5, whatever it is, to something 10 times that value. And if you think about what that means, is to sell yourself at £100 million, you've got to have an annual recurring revenue of probably £1.5 million. And think about how hard it is to have an annual recurring revenue of £1.5 million in any short order whatsoever. It's really, really, really tough. So to be able to do that, and sorry, not even £1.5 million, £15 million, I'm out by a factor of 10. You've got to have a £15 million, 1.5 annual recurring revenue. So if you jump on the bandwagon with VCs, bear in mind that for you to have the exit you want, you've got to hit a revenue target, which is very hard to reach. And secondly, there's probably a 1 in 10 chance of you succeeding. That's all. When a VC invests in you, they have to see the market size, £100 million valuation, but they are also investing you on the assumption that 90% of the time you will fail. So just because you get the money doesn't mean that you're going to be successful. There's two barriers. One is you have to be successful, really successful, and earn £15 million annual recurring revenue to be sold at 100 million, notwithstanding the efforts of finding a buyer. But more to the point, you on a weighted average basis are going to fail, even in the eyes of the people who are backing you. And that's terrifying. So it's a really big thing for an entrepreneur to take on their shoulders when they realize that. It's huge. Scared the crap out of me, I tell you.
There's a few points, I guess, to answer there. The first point that you made is around, I just had a comment, you mentioned TransferWise, but there's also the likes of Monzo, who struggles quite publicly with their refinancing rounds. And I think, again, going back to some of the points that were mentioned earlier, sometimes the differentiator, especially with some of the digital banks, is their marketing. And at a time when that's all that you've got left, because people are not making money off current accounts, they're turning to lending. A lot of the digital banks that started purely focused on current accounts are now opening lending, like Starling announced. It's the biggest part of their revenue is now through lending and SME lending. So I think it's kind of looking at what is the industry actually solving and how are we getting into the hands of consumers. For me, it's actually what's taking place and what is sustainable, not just from a revenue point of view, but from a practical, how many users have you got signed up? Well, actually, how many users are actually trading and actually using your platform as well. And then I did have another point just to answer. I guess it's not just about selling to another investor. It may be that you want, there's a lot of banks. You talked again about consolidation in the market, and that's a subject that everybody could go on about, how many incumbents are just going to buy up fintech, but that's a huge subject. And then it's not the only way to go, because a lot of the objective is to IPO for a lot of my clients ultimately as well.
Yeah, if you take money from a VC, it's to IPO or find a trade sale. That's the only thing they're interested in. They want their money back. But you're right, being bought in by an incumbent is another way of doing it. But then again, if you're bought in by a incumbent, then you end up just as you are with being sold either through an IPO, or you end up with a set of rules that aren't necessarily yours. The governance, your ability to control the governance disappears the moment you sign the check with the VC. It's so fraught. It really is.
It's an interesting topic. I know I'm taking the conversation a different way, but that's where I'm quite a bit of a fan of the regulator, and especially in the UK, because I do think from a hot air balloon viewpoint, they keep us focused on what fintech's trying to achieve and why we're there. Ultimately, when we can all get a little bit introspective and concerned with deals and moving around money and people, I think we should be pleased with the type of regulator we have here. It's aspirational for a lot of countries.
No, I'd agree. They will step in and stop something. I think if it's going too badly wrong, they're quite good at that. So
sorry, Julian, I know you were.
Oh, sorry. Well, actually, it's because
the timing
related to things that you guys have been talking about, but I think that the way that investors look at fintech is, and all industries really is going to evolve quite a bit over the course of this year. And whenever I look at that, I think that a lot of fintech start out in a niche, and then they kind of really zone in on that niche, and it's almost one of the things that they're advised to do by mentors at times as well. But that means that their revenues quite often are dependent on that niche as well. And I think resilience has become quite a big focus in fintech, and being able to show that you're building a business that's got resilience to ride out different sort of types of turbulence is going to be something that comes into focus more. And so I think we'll probably see a bit of consolidation of fintechs. Fintechs joining forces so that they've got complementary revenue streams and they can kind of share efficiencies. But I think as well for investors that'll put more focus on where's your cost base, and is that the best? Have you optimized your cost base or not? And I think that might really help locations like Manchester and other regional cities to to attract people.
100%, Julian, by the way. The most important thing that anybody could do at the start of COVID was to cut your costs. It's the surest way to providing yourself a runway in an environment where you have an uncertainty and then a double uncertainty on the sales uptick. Cut your costs. Small business 101, and that plays so much to the strengths of moving out of London, of finding a cheaper way of doing things, finding a cheaper way of not having long leases, all of that kind of stuff. It's yeah, very good point.
Yeah, and I think that's the big opportunity coming out of all of this. And Rachel, I don't know what your thoughts are, but how ready is Manchester for an influx of of people looking to establish a base, or or to come to Manchester from London, or even from other international cities as well, where the cost base is higher?
No, absolutely, and it's something that we've seen trends around north shoring over the last 5 or so years. Corporates moving operations out of London up to the north, and I think in my view, I think that's only going to increase, because one of the big pushbacks that we get from fintechs and financial services companies is that they're saying, well, we need to be in London because our clients are in London. We need to be physically close to the regulator. We couldn't possibly move up to Manchester. It would never work. And the last 6 months have proved that everyone can work remotely. Businesses have been very agile, and I think regulators have shown that they have to deliver value in a different way as well. So I think Manchester's really primed and ready. But I suppose from our perspective, it's not just about attracting those businesses up to Manchester, it's making sure that Greater Manchester has the resources in place to support those businesses. So thinking about the work that the GMCA and Andy Burnham's team are doing around promoting digital skills, supporting people who might be at risk of redundancy, or their current roles becoming obsolete, and promoting retraining. Organisations like North Coders and Tech Returners, who are promoting that digital that route into digitalisation, is as important as us saying, come to Manchester, we've got room for you, because I think we've got to have all of the building blocks in place to support that, and the city's being very, very proactive in that respect. So I think there's a great opportunity that's come out of COVID, and I think that I suppose Greater Manchester has shown how resilient it is as a region, which I hope will lead to even more investment.
Yeah, good. I think that's reasons to be positive. I'm conscious of time. I think it would be good to just ask you guys all for a quick snapshot answer to a question, and then I'll hand over to Chris to kind of close out the conference. I think we should aim to be wrapping up at 5 o'clock. So looking forward to 2021. Question to each of you: What would you really like to see happen in Manchester? What do you think's the sort of the big thing that could make a big difference to the region? Kimberley, shall we start with you? We've got to try and keep these short if you don't mind.
Keep it really short, sorry. I think it's been discussed before. We've covered topics in the FinTech committee about what's important. We talked about investment, community, signposting, but I think something that would open us up would be an event in Manchester, a FinTech event in Manchester. I don't mean a Manchester FinTech event. We've got these happening already, which are fantastic. I'm not talking about replacing what we're doing. I mean, a national FinTech event in Manchester. I'd like to see Money 2020 here. I'd like to see, FinTech Connect here, not because it's a regional version, because we've got that covered, but because we're a great place to be, and we're going to have attendees, and it'll, you have these events in Vegas and it's kind of a closed audience. You get that community getting a feel for the city as well, holding events, holding meetings. I'd like to see Manchester host a national FinTech event, an international FinTech event.
Sounds good. And I think that sounds really realistic as well. Chris, you've got another call, haven't you? Are you okay to?
No, I can stay on. So I'll don't worry. I'll segue into a summary, but you go for it.
I just wanted to check, Mark. Why don't you go next, because I think you've got a 5 o'clock as well. So.
Yeah, I mean, very, very simple. And again, it's kind of cheating, so I'm going to copy Kimberley's answer. But it's something that we've discussed on the FinTech panel, and it is that getting a national conference into Manchester. The likes of FinTech Connect There's no reason why we couldn't do it. We've got, as I mentioned earlier, we've got the transport links in Manchester. We've got the locations we can do it. Certainly in the insurance world, the BEVA conference is held in Manchester every year. So it's everything's set up there for it to be done. So I think 2021, I would love to see a national FinTech conference being held in Manchester.
Okay, like that. Bigger than FinTech North conference. Yeah, like it. Rachel, what do you think?
I think for me, it's built. I suppose we've had some great profile nationally and internationally in 2020, and it's really just to build on that and to continue building international links with key FinTech hubs across the world. And to continue to attract more and more companies. We've got 5 FinTech unicorns that are based in Manchester already. So I think the goal for 2021 is to get 10 in. Nice and easy.
Okay, good. Okay, well, look, thanks everyone. I think that brings us to a close. Chris, do you want to say some closing words? Joe, do you want to put your camera on as well? It's good to get you back on the screen. You were here at the start.
Yeah. Look, it's been a great event. I'm going to just finish by saying that there are a couple of things that I'd like to see. I like the idea of an event. I think that's a great one. I think, an event which is in and of its own right because Manchester's a place to be. You have lots of international delegates coming in. It is the Money 2020, FinTech Connect, whatever it may be. It's one of the big international brands that's picked Manchester just because it's Manchester and it's got a lot going on. But a couple of other things. First is, I'd like to see the FinTech Committee, which I think is a fantastic idea, iterate a strategy for the region on FinTech. Now, I'm sure Rachel has probably got one for the region on FinTech, but I want the community to do it for themselves and not be led by MIDAS, which has Manchester level aspirations rather than FinTech level aspirations. And the reason why it's important is it's going to become an important strand of what the new national network, whatever comes out of, or whatever it's called, that comes out of this strategy review, is going to be asking of the different FinTech clusters, please come up with your 3-year strategy plan. It'll have to be a strategy document. It'll have to be something concrete in the way that FinTech Scotland has iterated very clearly, with the help, to be fair, of some very expensive consultancies like Ernst & Young and others, iterated a clear 3-year strategy to which it's going to be held accountable. So I'd like to see that. And then the final thing is, and it's a bit of a disappointment for me, is where's AJ Bell? The newest unicorn that exists in Manchester, and one that has been doing very, very, very well over COVID because it has supplied people with the savings opportunities en masse and en bloc. It needs to get involved. It needs to stand up and be counted, because I think I like AJ Bell. I like the founder of AJ Bell. I just think that supporting the region where it's based could not be a better or clearer statement of its intent to serve the community locally. It's kind of a tough place to end, but I just think that they perhaps have been so busy they haven't engaged as well as they should. And I think there's a massive opportunity to put Manchester on the map in that wealth management space. But fantastic event as ever. Thank you, Julian, and thank you, Joe, for sorting it out. I really enjoyed the showcases as well. Just seeing that local endeavor, that local aspiration, that local growth is really, I always feel really exciting, and it's given me some things to think about that I can take to some funders that I know. They're always interested in hearing about interesting, new and developing startups. So I will absolutely be taking some of that forward, particularly when I get hold of the slides, Julian. So please don't forget that. We had a request from other people in the audience. So please post those up. So look, I'll leave it there. Thank you everyone for staying on, those that you're left, and thanks for those who are watching this after the fact for watching this, and I hope you find it very useful. Please do reach out to me, Julian, or Joe if you have any questions.
Thank you, Chris. Cheers for that. Thanks for your support and your role as chair today. You've been fantastic too. So I just want to give you a shout out there. just quickly, just wanted to thank everybody, you know, who's dialed in today, who's joined the event virtually, who's still with us, you know, in this graveyard slot, so to speak, just past 5 o'clock. I just quickly wanted to highlight some of our upcoming events. We've got a Future of Savings event on the 18th of November. That's next week, next Wednesday. So we'll be covering off some sort of similar things to what we saw emerging from the showcase today. We've got a event on the 26th of November. That's all about the future of fintech, focused in on talent and skills. We've got some great speakers lined up for that, including James Kahn, CBE, and also North Coders, who were mentioned earlier, as well as part of that reskilling agenda. And then past that, on the 10th of December, we've got a financial inclusion forum as well. So it was really important to us at FinTech North to hold a dedicated event all around financial inclusion, and that was something else that was mentioned here today. So just wanted to highlight those events. Thank everybody for dialing in and joining and supporting FinTech North generally. Julian, do you have any final comments or anything?
No, Joe, you close it out.
Brilliant, will do. Well, yeah, I'll close it out there, and thanks everybody for joining, and hope to see you all soon at a FinTech North event.
Thanks, everyone.